Hello and welcome to another update video for Bitcoin. Just before the weekly candle close, not a lot of price movement, but because we don't have a lot of price movement or didn't have a lot of price movement today, I would like to talk a little bit about possible strategies here, how to trade the next moves, and to give people a little bit more clarity how the Elliott waves can actually be used for trading. I did that recently on some of the ETH videos, talking a little bit about mindset. I think they are very valuable lessons, and hopefully, obviously you have to have your own view, take your own perspective, but maybe, if there are one or two bits here in this sort of video that might be helpful, just integrate that into your future trading. I can only share my own views, that. But also really want to elaborate a little bit on the Elliott waves and why they are so useful, and why. And I still get these comments, your count is wrong or whatever, it's going up and not down. And this is not what this is about. The Elliott waves that are used to analyze these markets, and I know a lot of the, let's say, Moon Boys or other TA channels that you can see, it's all about price predictions, and it's about, I did tell you that, it worked out. But this is not really what TA is for. You use TA to understand if an area, a price area in which you might you might get into, if it provides you with a better reward compared to the risk. That's all it is. And if you understand that there is, for example, a bullish count that is highly likely, and there is also a bearish count that is highly likely, a bit like the situation which we currently are in, because we're sort of sitting on the fence here with Bitcoin, then there is a little bit of a difficult situation, isn't it? So we need to wait for the skies to clear, really. Sometimes you get the situation where you only have bullish counts, and then that clears things up pretty much, and there will be, as I said in one of the previous videos today, there will be the situation when there will be a bullish count and maybe a less bullish count, so maybe above 30k we get there, but at the moment we are just in a situation where of course it can go up or it can go down. That is not a problem, but it is key to understand, if you're an investor or trader, what the market is capable of. And if you understand the different kinds of counts, that you can understand if your trades are providing you, or the trade setups are providing you with a certain risk to reward ratio that might be attractive for you as a trader. So what I really want to talk about is how this mess here, which Bitcoin is producing at the moment, which is a completely different structure than, for example, Ethereum, can, for example, be traded, and what I would do. Not sure if I will in the end do it, because I'm not, all the time in front of the screen, but if I see it and if I can catch it, I might do that. So we talked here in the previous video about few things. So first of all, higher level, the overall trend is down, in my opinion. This, of course, it can go up as well, but I'm leaning slightly towards lower lows. The reason is because Bitcoin broke below 18.9k, and that took out one of the key bullish scenarios I had here in the chart. And there is, of course, still a bullish scenario available. That is why we need to be on high alert, because this could play out as well. So and again, that is also for some people maybe difficult to understand. If I tell you I'm leaning towards maybe more bullish, maybe more bearish, this doesn't, of course, mean it has to play out like that. That is maybe how a lot of people frame it, but it is not like that. It's also not really meant like that. I can tell you what I'm leaning towards, what I think is more likely, but we always want to be prepared for another scenario as well. It's part of your risk management. It's part of just being a flexible trader. If you cannot adapt to new scenarios, then you're not a good trader or investor or whatever. Absolutely not, because we're not making the markets here. I'm not doing it, you're not doing it, unless you're a whale. But no, this is about reacting to the market and understanding the possibilities the market has, and most importantly, understanding what people are going to do if certain levels are broken, and then you want to really react to that in a very clever way. It's about thinking ahead. So what is happening here now? We, in this overall bearish setup, at the moment it's a bearish setup, we would primarily expect here at some point this wave to come down. Now that is the overall scenario here, that we came down after this WXY scenario, basically a corrective wave pattern. We said that this here might be the last 5 wave move down. This could be a wave 1 here. We're now waiting for the wave 2 to finish. There would normally be a 3-wave move. That could be nearly finished. Yeah, WXY is a 3-wave move that could finish off here this wave 2. Absolutely, no problem. Would work out nicely. Dumping or jumping into resistance and then smashing down. Absolutely. We talked about the 21.9k level as a possible target for a wave 2. It is the 38.2% fib level. Let me just verify that. No, it's the 50% fib level, 21.9k. You can see how nice the market reacted to it. It touched it twice, maybe a double top, and maybe we're rolling over now. So it could be finished. Yeah, it could. This without a problem. This wave 2 could now be finished, and we can come down in this wave 3. Yeah, the wave 3 will be an impulsive move to the downside. So, of course, you know, you could short here. I'm not doing it because the situation for me is not clear. Yeah, you know, I'm looking for high probability setups. This is not necessarily one because we could even extend this further. You know, if we break through resistance, what do we do? So you could trade this short if you want to, if you have a signal, and then but with a tight stop loss. So this is one possibility. The market can come down here in wave 3, yeah, making lower lows, lower than 17.6k. The other scenario is that this here indeed is a wave 2, but the wave 2 will only be finished somewhere up here. Yeah, that we have here something like that the wave Y, which normally finishes the wave 2, is actually only the first wave, basically here a wave A. That can be counted as a wave A as well, a 3-wave move. It could be counted as a wave A. We're coming down in a wave B, and then we move up above a wave C, in a wave C. This would be a high probability setup. What would be the setup for me? So first of all, you need to understand from a higher level the retracement levels for this wave 2. If we move above 23.8k, then overall the wave 2 will get unlikely. So this is the first thing that you need to understand. The best setup for me would be here, if we now come down, yeah, reacting to that resistance, coming down in a wave B, that would be a corrective wave. That would be a corrective wave. And then taking a long here, a long position somewhere around, you know, depending on how low we really come. Here maybe, so above 19,200, yeah. So we should hold this level. If we don't hold this level, then it's probably not a wave B anymore, to be honest. But as long as we come down, see a corrective wave pattern, a 3-wave move, a corrective move, a choppy move to the downside, and hold above 19.2k, this could be a nice low risk setup for me to long. Okay, so that's one setup. If we move above, so this would still be a bearish setup, okay, because then the wave C could still go a bit higher as long as it stays overall below 23.8k, below the 78.6% fib level. Then the wave 2 could still come down from here. That would be an awesome setup. If we get an extension here, and if this wave itself maybe morphs into an impulse, and which can do, you know, it can break above that 21.9k level, and in that move breaks above even 23.8k, then we are switching to bullish. That is just what it is. So from experience, I can tell you that above this level, there should be an influx of traders and buy orders. That's 78.6% fib level. I would say from experience in this region, maybe already starting at 23.5, but in this region, you will see a lot of buyers come in. So that means if we really break above this level, you're going to see probably a spike in the price. Now, what a lot of people will do, a lot of people will try to trade that breakout. You can do that if you want to. I would urge against that. You can do it, but if you are a breakout trader, what I would do, I would use a small position only, because you are increasing your risk. Why would you increase your risk? So if we move above 23.8k, what support do you trade against? So you're suddenly trading against the support at, well, to be honest, here probably 19k, or even 18.5k. So if this morphs into an impulse, and we really move higher, and let's say we go up to 24K or whatever, have a spike there, what I would do, yeah, you can trade a breakout. Some people trade breakouts. I sometimes do it. But if you do it, you should scale down in size to limit your risk, because there will be a lot of people jumping on the train, FOMO, yeah, FOMO. But well, I would warn against that. I would try, breathe in, breathe out, calm down when this happens, because we want to wait then for the move down. We want to wait for the retracement, because what I would much more, and again, I don't give you any advice, but what I would look at is to trade then the pullback, because let's say this morphs into something bullish. If we break above 23.8K, I will probably count this as an impulse, as a bullish move. That would then be a wave 1 to the upside. And then I would wait for the wave 2 to the downside. And that could come all the way down to 19.7K, more likely maybe 20.6. But let's say you go in at around 20.6, you could then do that quite aggressively in anticipation of a move up. Again, no financial advice. This is what from the current view, what is a possible trade setup. And I just want to explain to you why the Elliott waves can be so useful to understand risk to reward. Because if we break above this level, I understand it's probably not a wave 2 anymore. It's not a bearish move anymore. It's probably bullish, which it will be above 23.8K. Then we're waiting for a corrective pullback. And then it is much more useful, in my opinion, to trade that pullback to go long there, somewhere here between maybe 19.7 and 21.2K, than to trying to trade that breakout above 23.8, because the pullback will come. So your risk increases massively if you trade the breakout. That is why I encourage people to scale down when you trade that particular breakout. But when you pull back, you could enter here at a much lower risk. Yeah, and you can still this trade can still fail, but your risk is much lower. Okay, so that's sort of how I would do it. So either trading that wave B when we come down straight away, going long, or waiting for that pullback. Should we pump? Yeah, a lot of people will jump on the train, will get burned, 100%. Okay, 99%. And then come down, and that is also here then waiting for that pullback. What if you have such a decision point here? If it breaks, do you trade the breakout? I wouldn't. I would wait for the pullback. Would wait for the market to decide which scenario the market is in, and then wait for that pullback, where a lot of FOMO people will get burnt. So that should prepare you for the next moves. That should show you also from which point of view we can get more bullish. And I'm used these days to these comments that, you're always changing your opinion, when the market breaks above a certain level, then you suddenly get bullish. Yeah, of course, because this is what the market is then most likely doing, looking at the higher picture. But what I also encourage people to understand is not necessarily basing your trades on the sentiment. Yeah, so you can very well trade, let's say, above a certain level. If the higher level setup gets very bullish, which it would be above 23.8K, this doesn't mean you jump on the train straight away. You wait for that pullback. Okay, be clever, look for the next moves. So hopefully that was useful. Let me know in the comments if you like more of these types of videos in the future. It should still have given you an idea what's going to happen here next, the different alternative and possible scenarios here, and how to possibly trade them. But again, how you trade them then eventually is your decision. So hopefully you liked the update. If you did, please hit the like button here, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye bye.